Good morning. I'd like to call to order the meeting of the Budget and Finance Committee meeting for Sun City West. I want to welcome our members, the staff, and those who have joined remotely. If anyone has any questions or comments remotely, you can send them in during the meeting and they will be addressed. I'd like to establish a quorum, and I will do a roll call of the members. John Hobold. Here. Lisa Vines. Harry Standenbein. Absent. Kathy Lindell. Here. Terry Burks. Here. Lou Mancuso. Next, moving on to the minutes from May 12th, 2020. I would ask for an approval and second of those, or additions or changes.
I motion that the committee accept as presented the minutes from the May meeting.
I second it.
Is there consensus that those be accepted? Okay. Those are accepted then. Thank you very much. I want to do a brief introduction for those who are here with me and also for those who may be listening in remotely. We have some new members on our committee this year. We have 3 who have returned from last year and 3 who are new to this committee. So I'm just going to go around the group, and I'd like you, when I call on you, you can click on your microphone and speak into it, please. Just tell your name. I'll just give you an example. My name is Ann Brown. I've been in Sun City West for almost 10 years, coming here from Springfield, Missouri. My background is in healthcare, budget, and finance, where I worked for 25 years. And I have business and economics undergrad degree and master's in healthcare administration. So Kathy, would you like to go next, please?
Sure. My name is Kathy Lindahl. I've lived here 1 year and 2 weeks. And my background, I was at Michigan State University. I came from Michigan. I was at Michigan State University for 34 years. I was assistant vice president for finance and operations, and we had 526 buildings. So I have a bachelor's, master's, and a law degree.
John Hobold, please.
My name is John Hobold. My wife and I have been residents for 8 years. We started as snowbirds and progressed through renting, buying first home and second home, and we are now full-time residents of Sun City and residents of the state of Arizona. My career was spent almost entirely with Ralston Purina and then Nestle Purina, where I was an economist working through various practical microeconomic positions. My education includes a CPA, although I am a non-practicing CPA. I need plenty more practice. Thank you.
Thank you, John. Terry.
My name's Terry Burks. I've been in the Valley for 27 years. The last almost 4 years here in Sun City West, prior to that, Scottsdale. Worked as a banker for all my life for 40 years, mostly senior operations person, ran branch networks, security departments. The last 15, I ran a national group that managed community management companies, so I have that experience.
Thank you. Lisa?
Hi, Lisa Vines. My husband and I have been in Sun City West full-time for 5.5 years. I am project manager and finance manager for about 20 years. And I've been on the Boomers board for the whole 5.5 years I've been here. So I'm looking forward to retiring from that board and possibly joining the governing board. I don't know, they're trying to rope me into that. Stop it, George. So this is my second year on the Budget and Finance Committee, so I'm looking forward to this. So we love it here.
Thank you. Lou?
Good morning. My name is Lou Mancuso. I'm from New Jersey, and please don't hold that against me. I've been here 13 years. I moved out in 2007. Started a career in apartment ownership. I owned small apartment complexes. Then went to work for the state of New Jersey, where I became the Chief Information Officer for the New Jersey Department of Corrections. Prior to that, within the department, I was the Assistant Budget Officer. I ended my career with the state of New Jersey as the Director of Project Management for Information Technology. And I look forward to being on this committee and learning more about Sun City West. It is a paradise. Thank you.
Thank you, and thanks to all of you who agreed to serve on this committee this year. The committee members have in front of them a sheet that has the contact information for all people serving on committees in Sun City West this year. This is an information only. It is confidential, not to be shared, but it is for your use in case you need to contact someone on one of the other committees. So that's what it's there for, is just for your use.
Ann,
Yes.
might I make one suggestion?
Sure, Lou.
The lowercase l's are often mistaken for integer 1. I would recommend that the email addresses have an uppercase L for myself and Lisa. It happens very frequently. It happened with us. Just a suggestion.
Thank you very much. I will, I think all of us need to do that because Kathy has a capital L in hers and it shows up very clearly. So we all might want to make note of that on our information. The next thing we need to do is have a committee secretary, and the handout that I've given you gives some information about the secretary. There is a format that is used here in within the governing board. We have a sign-in sheet to capture who is here. We have an order of what happens. It's not needing to take down every single word. When there is a motion made, there is who makes the motion. If there is a second, that is recorded. They email them in a typed format, usually Word, to the secretary within just a couple of days of the meeting. So I'm going to ask this morning if anyone would like to volunteer to be secretary. Well, that was, would anyone volunteer to be secretary today? And we may have to rotate this. If not, we're going to do what Karen just told me is volunteer. I'm going to tell you you're the secretary. Anyone want to take it on today? Lou, would you take it on today? I'll take it on today. Okay. Lou will take it on today.
I will take it on today only.
Okay. Thank you very much.
And I will make that part of the minutes. Now, is someone recording this?
You are now.
Am I, when I say recording, are we video recording this so that?
It's going to be on YouTube, so if you want to go to look at YouTube, you will find out some Key West website, you can listen to and see what's on the screen. You are now being shown.
Very good, thank you.
Thank you, Lou. The next thing we will have, and by the way, if we do a rotating, you may have another turn at this, Lou, so we may just have to rotate this among the members. The next thing we're going to talk about is using board docs. I don't know if all of you got onto board docs to get your information. If you need information on accessing it, it is in the little packet that's in front of you. There's also information on microphone usage, and if you're speaking, your little green light should be lit. If you're not speaking, please push it off so we don't get the background noise that comes with it. The next thing are our committee duties, and we have just a few duties that we are required to do every year by the governing board. We review all aspects of the financial policies and financial plans of the association and make recommendations to the governing board and the general manager. We also provide recommendations to the governing board regarding the general manager's proposed annual financial plan, that's the budget, the 5-year financial forecast, capital equipment, and projects by December 1 of every year, and the association's insurance requirements and policies. Prior to the first day of January each year, we shall recommend for governing board approval a reputable CPA firm to conduct the annual financial audit. And finally, we oversee and report the performance and balances of invested association reserve funds on a quarterly basis to the governing board, and also recommend policy changes regarding the investment of reserve funds as necessary. We are not part of operations. We are part of governance. And I hope that each of you, if you have not done so yet, will download and read the committee member handbook, because it will give you a lot of good information about serving on a committee. I know I'm going rather quickly, but we have a large agenda, so if anyone has questions, please speak up. The next item on our agenda is an update on the Capital and Reserve Fund, and I'm going to turn that over to our CFO, Pete Finelli.
Good morning and welcome, everybody. I really appreciate all your service, and hopefully we'll continue to have a vibrant committee and answer all your questions, so thank you. And very important part of the Budget and Finance Committee is the capital. You guys are heavy participants during the budget process in reviewing what comes out of charter clubs, what comes out of properties, what you recommend, and the finances to avail ourselves to those spends. So it's appropriate that we give you an update on what occurred and what's occurring in the current year. So a real brief slideshow. Last year, the fiscal year 20, there was about 7.4 million budgeted. John Hobold and I were talking right before the meeting, and I think it's appropriate to kind of say here, if you look at the cash flow statement, you'll see that about 4.2 million went out the door for capital spend. A real brief interlude here is this association doesn't close its books at June 30th on capital spend. We will do a carryover. We encumber those funds that we are aware of, and so, excuse me, an item that was purchase ordered in May or June very likely would have the spend go out the door in the following year. So we never have a 100% correlation. So that 7.4 million actually ended up with about 234,000 on projects that were bid out lower than what was expected, and or we used in-house labor. Very, very high kudos to Russ Roston, Carl Wilhelm, Todd, Patty. They are, and a variety of others, but those are the big three. And they're very judicious with our capital spend. And then there were items that were eliminated when the board made the decision in May. It doesn't always mean that the need transpired, or some of these carryover items occurred as well. So 2.5 million or so was in that carryover budget, and I might speak to that a little bit later when we look at the June 30th balance sheet. The biggest item in there is about 1 point something, don't hold me the number, I think it's $1.2 million for the Kuntz expansion. We had made 2 or 3 payments, progress payments by June 30th, and the rest is encumbered over. So to the current year, there were 77 distinct capital budget items authorized by the board that had 5.9 million. And just to give a brief interlude, many of you probably listen in, but if you're new to the board, when we approved this, we were quite bluntly in the midst of the depths of COVID impact. And so questions abounded about what would occur if we saw a serious impact on our APF funds, or if the income statement was impacted in a serious way, either on the expenses or on the revenues. So the general manager, Bill Schwind, organized a committee where all the directors and managers identified what we believe could wait for sure till January 1st, at which point in time we would evaluate those items, APFs, as well as the income statement. And then if the year was going well, the 1.8 million would be released for moving forward. It's been holding up well, and I think it was a good decision. 32 items have actually issued purchase orders since July 1st. What I mean on 1.24, we've actually extended about 2.5 million of maybe even more of purchase orders, but what I mean by the completed means that it's kind of a very distinct purchase order, one PO, one invoice. Even though the work might not be done, we have a pretty good idea. So this is a very fluid number, but at this time, savings already have been identified against the authorized amount versus the actual purchase orders, and we're about 130,000 in the favorable column. I don't expect you to read this. I do encourage you, any questions you have at all about carryover, about budget, about completed projects, spend, what the identifiers are of R&R or new capital, where they're being done, any of that is identified within the capital tracker. It resides completely under my domain. And what I did here was for your purposes to see where purchase orders had been extended. That's out in the far right. And then we have very few, if any, that are in the status of invoice paid and then completed. So this will start to get much more refined as the year goes on. Switching out of capital for a second into the reserve fund, I'll be giving a brief presentation on what some of these acronyms mean. But the reserve study is essentially an evaluation of the reserve funds at any point in time, but at this instance, down in the bottom left, the dollar amount is hard to read, but 27.2 million was in the reserve funds, and it's evaluated against an acronym I'll be explaining in a few minutes called the FFB, the fully funded balance, and then the encumbrance of 2.5 million. So this 27 against the aggregate of 48 plus 2.5 million is about a 50% ratio. The budget column here is all out in approved status. This was the operating budget. This was the interest expected to be earned and the APF fees. Those are all our inflows of about 6 million. And then the cash flow of 5.9 for those that were part of the governing board. You could specifically look to see those 5.9 million are all the approved budgets. So we anticipate by the end of next year that we will be improving in our reserve funds against the FFB. That's my update, and I'll have a few more explanations of that in some future slides.
Thank you. Forgot to turn the microphone on. I do want to have the committee have input on this, and it's going to be my practice. I'm going to ask each of you individually if you have any questions or comments so that everybody has an opportunity to have input. So Lou, I'm going to start with you on that end.
Thanks, Ann. What does the acronym R&R stand for?
Repair and replacement.
Okay, there's a lot here to digest. So at this time, I really don't have any questions. I need to sort of go through it and understand it. It was a nice presentation, Pete. So the answer is no questions.
Okay, thank you very much, Lou. Lisa?
No, thanks, Ann. Great presentation once again, Pete. Thank you. No, I don't have any questions.
Terry?
No, great presentation, no questions. Thank you.
Thank you. John?
I have one topic I'd like to ask about. It's a holdover from one that was discussed last year, so for those of you that were not here last year, forgive me starting in the middle on this. As I recall, the 5-year plan or so on the capital expenditures reserve study looks very good, looks very solid. I seem to recall that the irrigation system was the big bogey going forward. And I seem to remember that the numbers were much larger than this. They were more on the order of 10 or 12 million over the planning horizon. And I see this has more like about 7 in there. Is there any developments on that have changed that would be, a short explanation for the benefit of the group, because I think as we go forward, that's one item we have to watch.
Yeah, absolutely. Great question, John. The answer is yes, it did change. Roughly 6 to 8 weeks ago, we invited our council, Mr. Hazelwood and Brill, what's the lawyer on water? Okay, we don't have his name, but Mr. Hazelwood's firm has employed a water rights expert, and he gave us great confidence and some literal interpretation of what the Arizona Department of Water Rights would interpret for requirements for deturfing or getting to a certain amount of water spray per acre foot of turf. And the verbiage we're hearing from him is that the grandfathering of our courses would exempt us from required deturfing, and much of our funding in our reserves that you picked up on was for a combination of the replacement of all, let's say, Grandview's in the wheelhouse, 160 acres, to replace and re-irrigate all 160 would normally abet at $25,000. That's the kind of the going rate per acre irrigated. But when you involve deturfing, it's a much more extensive project. It's almost $40,000 to extract and get the acreage down to the required amount that we initially had in there at going all the way down to 90 acres. So that $15,000 gap, 40,000 minus 25 times about 70 acres was what was pushing up our amount. Just on Grandview, I think there was about a $700,000 reduction.
Thank you, Pete. Once again, the wisdom of waiting for the facts to roll in and making as much of a fact-based decision as possible has really benefited the community on that one. Thank you.
Thank you. Mhm.
Kathy, do you have any questions?
Yeah, I do. I'm new, so bear with me as I have a couple questions. On your capital projects, at the end of the day, do you manage project by project, or do you manage all capital projects, savings at the end come together and you can spend on either projects?
Yes, our policies are pretty clear on that. We don't ever expect to be perfect to a bid that was put forward the governing board that can change due to inflation, or we decide to have some of it done in-house. We find a better vendor. And the policy allows that if you are in the savings mode, which we're in right now, 131,000, the general manager has up to $50,000 of authority to change or proceed, if you will, with one of those 77 distinct line items. And if he gets a bid that's budgeted at 100,000 and the lowest of the 3 bids is 110, if we're in the savings column, then he's authorized to proceed with that.
Okay, thank you. And then my second question is just, I don't normally nitpick, but I just have a question on fitness area. I call that a bad miss compared to what the budget was. Was that just additional purchase of equipment or?
Actually, it's good news, and it kind of comes back to 3 things you've mentioned, so good catch. First of all, to re-clarify on the case, Katie, would you go back one? Okay, I encourage you to come into my office, but this column right in the middle is the sort that I did, and this spreadsheet has filters at the top of every single column. And so what I did on this was, these are the 32 items that have gone out the door if there was going to be any discussion. And I don't expect to have that, but you can come to my office anytime. To the left of those are 3 hidden columns. And what those are is what you referenced earlier, is the 2.5 million of encumbered projects of carryover. To your question then, last year, $57,000 was budgeted for fitness equipment at Kuntz. And the decision was made to encumber that over because we wanted to buy equipment all at the same time for the new expanded space to be fitted out, plus the old to be replaced. The aggregate of those two is $57,000 last year plus $60,000 this year, gave us $117,000 to spend, and what the bid came in is in the low 100s. So good news is we did actually have savings on that, but we had to apply the POs against the open invoice, and sadly it made it look like there's a deficit there. But if I would have expanded this out, you would have seen the carryover have a positive variance of more than that.
Does that answer your question? Thank you. First goof of your chairman, we do not have to vote to move this forward to the governing board. This was information only. We will now move into new business, and we have a presentation from our auditors, and I believe, are you doing that, Pete?
No, she's on our speakerphone. Jean Dietrich with the law firm, or excuse me, the accounting firm of Clifton, Larson and Allen.
Morning.
Good morning, can you hear me okay?
Yes, we can, thank you.
Okay, so, we'll start our presentation with the audit report. And so if you could, page through to page 1 of the report, this is where our independent auditors report on the financial statements for the recreation centers in Sun City West Inc. for the years ended June 30, 2020 and 2019. If you go to page 2 of the report. Next page. Right there at the top, page 2, is our opinion on the financial statements, and please to let the committee know that we are issuing a clean, unmodified opinion of the financial statements for the years ended June 30, 2020 and 2019. The next page of the report is going to present the balance sheet of the association, both the assets and liabilities and equity within the organization. Currently, for the year ended June 30, 2020, there's a healthy members' equity of about $74.9 million, of which $47.6 million is undesignated. The majority of that undesignated assets is held within the land and buildings and equipment. Total assets of about $86.6 million. In presenting the balance sheet, there is a new line item, and that is the paycheck protection loan for about $2 million. And so that presentation will be different from the prior year. Overall, an increase of members' equity of about $3.2 million.
Can you scroll down a little? Continue. No, ma'am.
and for the year ended June 30, 2020, a really healthy reserve of about $27.2 million, up from $25.5 million in the prior year. And that disclosure continues on in that you have some cash and cash equivalents that are held to maturity and recorded at amortized cost of about $3.7 million. And those will be maturing in the next year. Note 3 is a fair value measurement disclosure for your investments. This measures the extent that inputs are used to determine the valuation of your investments held. That disclosure continues on through page 11 and page 12. And on page 12, you're going to have a breakout of those investments. And you'll see that the association holds investments that are readily determinable in value, that you can go onto the stock exchange and see how much that stock or that investment is held at each day. So a readily determined price. Note 4 is going to be disclosure of membership receivables and your allowance for doubtful accounts. Overall, membership dues were about $280,000 compared to about $171,000. This will look different when compared to the prior year in that the impact of the July billing has been removed. So you'll see a decrease of members' receivables offset with an equal decrease in deferred revenue for those July billings for fiscal year 2021. But overall, membership receivables as a percentage of total revenue. Go ahead. Is there a question?
No, ma'am.
Thank you. As a balance, minimal compared to the total ownership association assessments raised for the year. Note 5 is going to be a disclosure of concentration risk, and that there is the potential for risk of concentration associated in that everyone lives in the same community and assessments are raised within that community. Note 6 is going to be your disclosure of land, buildings, and equipment, and you're going to see that total costs of land, building, and equipment have increased about $3 million to $124.6 million. This has been offset with accumulated depreciation of about $79.2 million, resulting in about $45.4 million of land, building, and equipment, with depreciation expense for the year being $3.6 million. Note 7 is an additional note for the association disclosing the Paycheck Protection Program loan under the CARES Act that the association received. It was noted that the association as a 501c4 did not qualify for the program and was not eligible, and thus would be determined not eligible for forgiveness under that loan. Management and our understanding with the board, in conjunction with the board, is taking corrective actions to determine what further actions they will take regarding these funds. But this is a new note when presented when you compare this to the prior year. Note 8 begins on page 13 and continues on through page 14, and that's going to be the board designated funds, your repair and replacement funds, and the cash flows for those funds for the year ended June 30, 2020 and 2021. And so you're going to see how the asset preservation fees were used for capital expenditures, how you have encumbered capital change for the year, for those projects that were begun in the beginning of the year and carried over into the next, and the transfer subsequent to year end. So subsequent to June 30, 2020, you'll see a transfer out of the reserves of $657, resulting in an ending reserve balance of $27.2 million for the year ended June 30, 2020. Note 9 is your disclosure regarding your defined contribution savings plan, your 401k plan for the employees of the association. The profit sharing and matching contributions totaled about up slightly as compared to the prior year. Note 10 is just a normal disclosure for associations in that the association may become involved in claims and pending litigation arising in the normal course of its operation. We're not aware of any significant claims or litigation brought against the association, but this is disclosing that there is some risk associated with their normal operation. Note 11 discloses commitments and contingencies in that the association enters into various contracts with other companies for landscape and other services. In addition to that commitment that is overwhelming, with the impact of COVID-19 and pandemic, there is still some risk and contingencies associated with that, and that overall we don't know how the still developing pandemic will affect the association, but management believes that it is taking the appropriate action to mitigate any negative impacts or risks associated with the pandemic. The final note would be note 12, upcoming new accounting standards. The first standard is what we call the revenue recognition standard, the topic 606. This standard was to be implemented this year, but with the pandemic, the accounting standards board postponed the implementation date, and that now this revenue recognition standard will be impacting your next financial statement. And with associations and with reserves, there will be an impact to your statement. Yes? And the other standard that is upcoming, but that is still 2 years out, will be the implementation and treatment of leases, operating leases, in that standard will require the addition of a right to use assets and an offsetting liability added to the financial statements, but that's still 2 years out. On page 16, we'll begin the disclosure regarding your repairs and replacement funds, your supplementary information on future major repairs. And to note on page 16 is that the governing board is setting the repairs and replacement percentage funding goal of 40 to 100%, with 40% being the minimum. And as of June 30, 2020, that percentage was 56.41%. So overall, compared to other associations, a pretty healthy reserve set. On page 17, you're going to see the disclosure of the components of that reserve based on each center and each course, with an estimated current replacement cost of about $79.6 million. And on page 18 is just an additional disclosure of how much of that fund available right now, $26.5 million, how much is expected to go to repairs and replacements, and how much is expected to go to future capital purchases. That is the audited financial statements for June 30, 2020 and June 30, 2019 for the Recreation Centers in Sun City West, Inc. In regards to these financial statements, does the committee have any questions?
I'd like to go around, I'd like to go around and ask the members to give me any comments they may have. Kathy, I'll start with you.
No comments?
No questions or comments?
No comment.
No comments, thank you.
Lou Mancuso, no comment.
Okay, I appreciate Jean giving us that presentation today, and hearing no comments, we need to move this forward to the governing board. Whoops. Can you not? Oh, sorry. Okay, thank you. We do need to move this forward to the governing board for their approval. So I would like to poll the members of the committee for their consensus to take this to the governing board. So, John?
Affirm, move forward.
Kathy?
Yes.
Thank you. Terry?
Yes?
Lisa?
Yes.
Lou?
Yes.
Okay, thank you. That was unanimous consensus to take this to the governing board, and I will do that on Thursday. The next thing we have is Pete Finelli, and this will be a review of our 2021 auditor assignment. Pete, I'm going to turn it over to you.
Thank you. As part of the bylaws, policies, it does request that the firm that of Clifton Larson Allen or whoever is representing be reviewed for their performance, and you guys give a recommendation to the governing board for continuance or change. My strong recommendation, based in many parts of what you just saw, the Gene Dietrich 5 components of the recommendation are as follows. They've had more than 60 years of service with over 120 locations. They are one of the leaders in nonprofit community associations such as the rec centers of Sun City West. Hugely important is that their staff is familiar with our policies and procedures and the practices. And of course, they've been our audit firm since 2008. This is critical for performing the audit timely with less staff frustrations by not having to explain the process to an audit firm not familiar with these items. Hugely important is number 3 up on the board. They have, and not every firm does this, they have a portal to which a request, and I think there were well over 100, 150 requests from staff for response to their inquiries, and when you can scan it, encrypt it, and send it up to the portal, timeliness is done, costs and postage and turnaround is just magnified in a exponential way. So not every firm has that, so I give them a lot of credit. Their pricing is very competitive and historically is on a trend line that has not seen significant increase. And they also, the audit firm for Sun City Grand, we've already had some occasions to interact with them for how they're interpreting some of these new FASB regulations that are coming on board, 606 and the leases and things like that, as well as accounting practices, so that we have some continuity and more on that over the course of the next couple months. So I strongly recommend it. And before I forget, the association is blessed, exponentially blessed with the accounting manager, Tim D'Angelo. Anybody that knows him, he's here at 7, he goes home at 5, and oftentimes on either side of that, up early and going late. He's just an absolute genius, and we're very blessed. Karen Woods is the accounting manager, or excuse me, the accountant, and I hope that these results, in my 2 years here, we've had essentially a clean slate rendered to, and you can see how much they're looking at, so I want to give them credit, so thank you.
Thank you, Pete, for that presentation and analysis of Clifton Larson and your recommendation that we move forward with them. This is, of course, something that our committee would need to approve and send on to the governing board for their approval. So again, I want to go around and allow Pete to take any questions from our committee members. Terry, start with you.
No questions. They've been here 12 years. They're doing a good job and they're competitive, so I don't see any reason to move. Thank you.
Lisa?
I have no questions.
Lou?
I'm in concurrence with Terry. Competitive, been here a while. Pete highly recommends them. I would say that we should continue with them.
Thank you. Kathy?
Yes, just I have a couple questions. It's unusual for me to see an audit firm that's been kept on for so long. Usually you see a 7 to 10-year rotation of auditors, so just so that you get a different look, even though it takes you, a year or two to do the run-up on it and in the learning curve. So my question is there, apparently there is no policy on rotation, and this is done on a year-to-year basis? That's my first question.
It is done on a year-to-year basis.
Okay, and then even though it appears they are competitive, have we ever done requests for proposals?
Pete?
You had 3 questions there, so that's good. First of all, you're correct on rotation. Just to be clear, Gene Dietrich represents the senior auditor. We did get 2 new representatives from the firm for the field work. So there was a new set of eyes, and I think that is standard practice. In my 2 cycles through here, we had a complete changeover of that. The competitiveness is actually, just FYI, you have to cycle back. This is one of the contracts that the governing board in its policies does allow to be beyond 1 year. And so when this very same recommendation was rendered a year ago, it was given a 3-year contract. But just you can extract from that because the engagement letter is annually. So you do have an out for whatever that's worth. And on the price point, this is, again, exempted from that bid process per se, under the general manager's authority for 50,000 and less. And so I brought up the competitiveness more from a cycle of the year over years has been with virtually no inflation. In fact, none for 5 years. Your decision if you wanted to entertain others. I think we're very blessed to have somewhat of their capacity, but that's certainly up for debate.
No, I don't have any other questions. I just had those.
Thank you. Appreciate your comments. John?
I recommend retaining.
We do need consensus of our committee to proceed to take this to the governing board, so I will go around again and ask for Kathy,
Yes.
John,
Yes.
Terry,
Yes.
Lisa,
Yes.
Lou.
Yes.
Okay, thank you. That was unanimous that we will move this forward to the governing board. The next item up we usually only have 1 set of financials, but since we haven't met all summer, we will now have Pete review the May, June, July, and August financials. Of course, May and June.
Thank you so much. 2 real quick precursor points. One, if you don't mind, kind of wait until I'm done with all 4. I'm going to kind of rapid fire through these, get more intense on the current year, as the prior year was pretty well explained by Gene. I'm going to make some just very salient points on that. And also again, if you have any questions about some levels of detail on these, I consider myself pretty well entrenched into what's going on with our association, but I might not have every variance at my beck and call, but we will get the answer back to you. So real briefly, up in front of you, or on your sheets you have, when we exited out of a real brief history of COVID, when we exited out of February, we had about a $500,000 favorable variance on the operating against the budget. March and April had some deterioration, mostly on the revenue side. Expenses were offset as best they can. By the time we got back to May, I was encouraged by this because we did see $175,000 of revenue loss, mostly in golf fees and pavilion, as you'd expect. But we offset that almost entirely with expense offsets, and so the variances were very minor against both prior year and the budget, both of which did not anticipate that. Also, if you'll scroll down just a little bit, Katie, We certainly took our lumps in April, March and April on the investment, but by that time, we started to see almost $700,000 recovered on our unrealized gains, essentially the equities. Sadly, on the other side of the coin, that's when we started to see some housing, no surprise there, but COVID-related showings really significantly suffered, and I've got some good news on that in the current year, but that's essentially what were the big movers in May, excuse me. For June, Katie? Again, you saw from Jean the year to date, but just a real brief on the month of June all by itself. We continue to see some impact of revenues. I've lost my beacon here. There it is. Lost, but not significantly against the budget. Again, expense offsets were favorable, and so even as some impacts of COVID were still happening, we were able to get a $43,000 favorable variance against the budget. Down in the capital-related section, positive variances. Positive related in both the, again, and the unrealized gains, as well as the small, it was still significant in June. We were getting some impact still of APF. So now kicking over to the year-to-date, the end of year, almost a 1.5 million shortfall in revenues, as Jean alluded to. And, oh, I'm sorry, you kicked to July. I'm sorry, could you roll back to June just for a sec? So it's just off the screen, but we were about $1.5 million lower on revenues. We did experience almost 1.1 million of offsets in the expense until at the end of the year, 467,000 shortfall against the operating budget. Down in the capital related, our investments for interest and dividends exceeded what we had budgeted. A lot of people don't remember because we talk more about what impacted during the COVID period, but leading up to February close, we were actually a little over $1 million ahead on our investments, and that retained itself. So 1.1 million added in appreciation of the equities and such. Club funded down here, we did come up short. We were ahead. I see Deb here. I'm trying to remember. I think we were as much as 70 ahead exiting out of February. So a strong housing market, and those kind of months derailed us over the last 4 months of the year. So we ended up with a shortfall on our APF fees. Gains and losses, we budget and we look at each item within the fixed assets of materiality that we think is going to fall off and be fully amortized. And so you take a loss if it's not, if it still has a residual value, and that just didn't come to as much fruition. And depreciation was significantly favorable as well, primarily because a lot of projects were delayed and didn't come online at the point of time we expected. So Jean and myself have presented, June, and I'll move on to the current year. Thank you, Katie, for July. So I think there's been evidence that we've been hearing at our manager meeting, and we're seeing golf revenues, rounds, and rate increase that went in place. So there was, I'll just be blunt, there was a lot of consternation of whether or not the golf fee revenues were going to hold up. So far, after July, we had a favorable variance. Expected shortfalls in pavilion and things like that, and of course merchandise and food with the curtailment of a lot of the availability of being able to do those. But overall, 34,000 favorable variance in the revenue side. We have been seeing shortages in our staff, and a lot of kudos to Todd, especially in the golf maintenance. But also, several of our facilities were closed, one for the expansion at Kuntz and the Beardsley due to COVID preparedness. Utilities, mostly again with some of the closed facilities. Repairs can be very volatile, so I don't necessarily spend a lot of time on that, as can landscape maintenance. Just to be clear, seed, chemicals, tree trimming, huge dollars can go in there and that can move. We look at it more over time than we do in any individual month. So overall, the expenses for July had a favorable $248,000, resulting then in a $282,000 ahead of after July. On the capital related, good news there. Investments are producing the interest and dividends we expected. Favorable equity, sizable move in July was very favorable. And then what I was talking about, I think we're starting to finally see the resurgence. If you remember, those were 270,000. So this was like 115,000 home sales. So we're sitting good against our budget for that. Moving on to August. Very similar to July in many regards. Almost identical on the revenue side, up in golf fees, down a little bit on some of the merchandise, food, as you expect. By the way, membership holding up good. So favorable 41,000 against the revenues, almost identical that we were seeing favorable variances on the salary side. Utilities actually were more in line despite Beardsley being closed in Kuntz, primarily because the no rain has had Todd Patty's golf pumps going 24/7 to keep all the turf irrigated. Again, repairs are pretty volatile, so I don't put a ton in either of those. Equipment is also a favorable variance, but we have a schedule that we prepare for the budget for the whole year, and timing can get off on that. If I think a big component is some low dollar fitness equipment, computers, things like that, and if we don't expend them in the month that we anticipated, then we get some favorables. It's almost identical to July, same $247,000 favorable variance, resulting then in 252,000 added. So out to the right, we now are at about a little over 535,000 ahead of our operating through August. And capital related, once again, the equity markets had a strong performance, so we gained almost 440,000, leading to a $1.1 million ahead year to date. APFs slightly dipped, but nothing like off the charts. We always anticipate August is not going to be the month that most people historically are buying homes. But so year to date, we're right in line. And then at the end of the day, with the 1.2 million added on the capital related plus the 500,000, year to date, we're in a pretty good position of being ahead of budget. So that's essentially my presentation for the financial report. So.
Pete, I want to thank you for that report, and I also want to point out to the committee members who have had this available to them, I like the way you summarize your notes at the end of them. Makes it easy to go through and look at those. As a committee, we normally only see these at one meeting a month, and we only see 1 month at a time. So this is a little bit excess of what we normally have. We do need to review these, and then they will be filed with the governing board. But I want to go ahead and go around the committee and ask them to give any questions or comments or reasons why they should not be filed. So I'll start with Kathy.
I support moving them forward.
Thank you. John?
Good presentation, Pete. Thank you very much. It was quite clear. I do have a question that was not on the sheet you covered. I have a question about the balance sheet. And my question is I'm in the August, I'm sorry. The Ann, why don't you go on, if you would mind going on and asking the other members, and I'll
Sure.
find the line item.
Will do. Lou?
A lot of information. I need to sit down and start evaluating it at this point. If the other committee members feel it should be filed, I'm in agreement.
Thank you. Lisa?
Well done, Pete. Thank you. I appreciate how you condensed everything and put it together. It was a great job.
Jerry?
Good job, Pete, thank you. I think it move forward.
John, have you had enough time to take a peek at what you wanted?
Well, I know it was on the June statement, so I was wrong about that, Pete. The board reserve funds, just for the sake of clarity, it increased by 2 million, and I'd just like to make sure that everybody has an understanding of what that item is. Just a point of clarification, that's all.
Sure. Without bringing it up, the ending balance at June of 19 was 25.5. It increased, as John said, to 27.2. I did a little precursor on that. Just the components of increase in or contributions to the reserve fund are threefold, and you will see this on a slide in a few minutes. Is the APF is by far the biggest component of contribution. Annually, over the last 3 to 4 or 5 years, 4.0 million has been the average. And of our overall contributions to the reserve funds, they represent 70% of that. The second part is the operating excess. On the June income statement, it was about 1.1 million. That flows through the cash flow funding, and it represents about 20% of our expected reserve fund contributions. And then lastly, annually, the interest and dividends are about 600,000. That's about what we budgeted for the current year, and that represents the remaining 10%. Favorable investment incomes, I think not stating, but we don't budget for unrealized gains. We don't know what the markets are going to do. But 1.1 million of that increase occurred because of the tailwinds of a favorable market, for sure.
Thank you. My second question is on again, a document that you didn't run over, the statement of cash flows for June, for the year ending. There was a huge increase year over year on the accounts payable and accrued. So again, just a point of clarification, no problem with any of it. I just would like to make sure everybody's got the same sheet music.
Yeah, the overall liabilities went from 9.1 to 11.8, 2.3 million, or 2.245 to be exact. Of that was the loan proceeds that we've earmarked without any earmarking. So they are up for governing board discussion of refund this Thursday.
Thank you.
Repayment, I'm sorry, not refund.
And John, you're familiar, accept the fact that we'll move forward and file these with the governing board?
Absolutely.
Okay. We've now been joined by Harry Standby. Harry, we have just had a review from Pete of the May, June, July, and August financials. I don't know if you have any questions on those, having looked at them, but we're taking questions, and if not, they'll be filed with the governing board. Are you okay? And you can unmask in here. Okay. We will go ahead and move forward with those then. The next item is a goal-setting discussion, and I mentioned earlier our committee duties, which could be construed as goals, but I wanted us to look at any goals that we as a committee might want to incorporate for the year. And I have just a couple I was going to throw out, and I want to just kind of leave this to be old business next meeting so that we can have a little bit further discussion and see what you all may bring forward. The one thing that we are required to do is to review all fiscal policies prior to December 1st. So that's an imperative, and that will stay on there. The other thing I thought was we need to be conscious representatives of budget and finance for Sun City West within our community. Now, I'm not advocating that anybody go out and start holding seminars or block parties or any such thing, but I do think that if you are approached by someone, you can share with them the resources that are available. Our finances are published each month in the Rec Center News. They are available for people to find online. People can come attend our meetings remotely at the moment, go to governing board meetings, find out what types of things that are happening. So just let people know what resources are. Having said that, I'll just kind of leave it. If anybody has any other ideas, you're welcome to speak up now, but I thought we would just discuss this a little further next month and see if anybody has any other goals. We don't need to have a lengthy list of goals. I'm not trying to create work for us, but want to make sure that we know what we're doing in this committee. Any observations or comments? Okay. We're going to move on now to Fiscal Policy 13, which was a policy revision review. This was reviewed, this is on collections. And this is something that I believe was done, those of you who were on the committee last year, correct me, but this is something that has occurred. Did it occur through the committee or did it occur, Pete, maybe you know?
By the way, to my left here, Terry Wood, she's the lead supervisor of membership, Deb Long, and our property title analyst. This is actually kind of new, Ann, and maybe I could let Deb explain, Deb or Terry, you guys speak to this, but essentially there was a policy being performed within membership and Deb's position properties, but it didn't have the actual in writing within the policy, so we thought it'd be transparent to our owner members to put this in. And essentially, Deb can speak to what we're accomplishing with this. It's been brought up into the workshop last week or 2 weeks ago, so hopefully it'll be voted on and approved, but the policy said you need to vet it.
Yes. As Pete said, this has already been presented to the governing board workshop, so I am sharing it with the committee today as information. It will be presented to the governing board on Thursday, the 24th of September. But I'm going to ask Deb Long, do you have anything you'd like to speak to on this, Deb, this policy?
In this particular instance, when a late fee is issued at 30 days delinquency on your annual owner member dues, you're given within the statement of the late notice that in 60 days a lien will be filed if the amount is still outstanding. The criteria, just to step back a second, everybody, you probably all know this, but everybody's independent on their own liability for the annual dues. So if there are two people on the property, they're going to each get their own individual statement. Going to be each individually analyzed for delinquency or in good standing. And so this policy says that if good standing is lost because you're now in a lien status as an owner member, then all members on the property are also going to be impacted by having their cards deactivated. And essentially, that's been the policy, but it's now going to be communicated to the owner members that this is the impact if you don't stay current.
Thank you. So we're allowing more transparency and just clarifying what has already been being done. Is that correct?
Yes.
Okay.
Madam Chairman,
Yes.
I just want to make the committee aware that this was written by the attorney in order to represent us correctly in the courts when we go to the lien process. It's not something that staff has done or anything like that. This is a representation from the associate's attorney for clarification on all these issues.
Thank you very much. That was a comment by our president of our governing board, George Kay. So I appreciate that. I'm just going to throw it out for any committee members who may have questions at the moment. We don't have to take any vote or anything on this, but I'll just go around. Lou, do you have any questions?
No questions.
Harry?
No questions.
Lisa?
No questions.
Harry?
Just one, what's the delinquency ratio now with the homeowner dues? I mean, is there 10% of the people, 1% of the people not paying their dues?
It got actually quite elevated during the COVID period. There was speculation on what that was, an inability to get into owner membership or into our membership area. But the receivables did elevate. And in April 1st, Bill Schwinn, the general manager, authorized a lien, I forget the right word, I apologize. No liens would be filed during that period. Essentially, we were giving relief due to all the components that you just referenced. So on July 15th, a whole slew of late notices were put out and advised that you're now upon your lien notice of 60 days. And we saw, once that hit, the outstanding AR came tumbling down. And answer to your question on a broader spectrum, pre-COVID, we would probably file, if I remember right from you, Deb, five liens a month, maybe.
Correct.
So we, out of 28,000, roughly 30,000, whatever the correct number is, 60 annual liens for inability or unwillingness to pay
Okay,
really is a very low
yeah,
ratio.
okay, that's what I would think, but I didn't know. Okay, thank you.
Anything else, Terry? No. John?
No questions.
Kathy? None, okay. Thank you. The next item on our agenda is our Budget and Finance Policy Statements Review. I am looking at those now and drawing up a spreadsheet of the different policies and when they have last been reviewed and revised. And I want to talk about this further at our meeting on October 4th. What I'm thinking is that I will split these into subcommittee groups of 2 or 3 members of our committee to look at several different ones, and many of them are very short. A couple of them are rather lengthy, but I think at least one of them that's very lengthy was just revised in the last several months, so it may not require too much from us. But I will get information out to those of you on the committee before our next meeting. But I just wanted to bring that up, that that's something we will be working on. Next item is the reserve fund education, and I'm going to ask our CFO, Pete Finelli, to address that, please.
This is a chance for me to clarify the acronyms that were within the reserve funds. So, first of all, this slide presentation was done by associations who has almost 25,000 clients across the nation. They, DJ Vlaming is the local consultant. He is also the reserve study preparer for Sun City Grand. So he has a lot of experience, and he prepared some of these slides. Again, right up here, the purpose is to, of course, be prepare for significant events, so to avoid surprises and special assessments. The three components of the reserve study are components themselves, the strength, and how do you fund that. And there are some criteria about, what goes into the reserve study. For Sun City West, we have almost 1,300 line items individually, whether, and I'll have a little slide here in a second of what some of those major components are. And also on the next slide, Katie, what isn't part of our reserve study is anything under 5,000 or anything that doesn't have a 5-year life. We're a large enough institution to be able to, so to speak, put that as part of our operating fund. And the brief list there was, Katie, could you go back just to, I think everybody knows this, but you'd be a little bit surprised, the depth of, there are probably 70 or 80 or 90 equipments at each course. And of course, what John was referencing, some of the big hitters are irrigation. And I won't go through everything, but you can see the depth of what makes up those 1,300 line items. So what does fully funded balance means? The technical term is the fractional age times the current cost. And so to put that into a more of a simplistic version, the top two is what I'm just going to talk about. So useful life, remaining useful life, the current cost, and the fully funded balance. So for this pool, these are all just examples. This is not real. Pool furniture replacement has a 5-year life on that 4,600. It's now at its 5-year life, so the fully funded would say you need to have 4,600 available. The second one is a perfect split down the middle. Pool resurfacing, 10-year life, $10,000. You're at halfway through it. Your funded balance should have $5,000 to be fully funded. And the aggregate of all these 8 or 9 here, 154,000. For us, it's 1,200, totaling right now about 49 million. And so that's fully funded balance. Next slide. It says, what is your reserve fund strength? So you'll see that next slide kind of gives a component of that. The actual reserves, 27 million or so for Sun City West against 49 million, gives you a reserve fund percent. And what does that mean? Well, it's risk. And but basically this would say that those that have, by the way, the arrow references where we are in the curve, and basically special assessment risk. So if you have 0% funds available, you don't, essentially you're an HOA that just doesn't do any of that, you have a pretty high risk of having a special assessment for when something goes wrong. But you have less than a 5%, that's about where we are, 5% chance of a special assessment needed when just by being in the medium range risk, and these green ones over here are for those that have essentially very close to 100% fully funded. But again, I highlight that if you heard Jean Dietrich about it, she does their firm does a significant amount of assessments, and she rated that a solid performance. And this real briefly is what is, how many people actually are in high risk. And so real quick, 8 plus 10 plus 12, about 30% are in high risk. These are about 20% are in significant fully funded range, and right there is where the pretty high percentage of the total, about the remaining 40% have a medium range of reserve fund strength. Any questions on this? Because I'm just going to briefly apply it to our specific Sun City West Association.
Pete, I have one question. Are you accounting for inflation in the fully fund, or the fund balance that you need?
So there's two answers to that. The reserve fund, fully fund balance at the current time would, of course, just be as we see the need at the time. And what I'm going to explain here in a second is what we call our what if. And the what if has 30 years. It was actually within the report, Dan, but we only display 5 or 10-year increments because that's most relevant for, the window that we want to analyze. For the purpose of the reserve study, fully funded, we apply a 3% or inflation increase to every item on the schedule, which quite bluntly is running about 1% high than what the last 5 years have been on actual CPI increases. So it's a slightly conservative posture, but I'd prefer to have it that way. And the reason why I do that, I asked the auditor, and he said that's essentially what they apply over vast chunks of their HOAs that they do the consulting for.
Anyone else have a question so far in this presentation?
So how does it apply to us? We talked about this a little bit before. Capital funds are brought in through the investment of the $27 million. We have I'll explain this a little bit. We have a 60-40 split on our Vanguard funds. And then we have about $3.8 million in JP Morgan liquidity, and those three all are by board directed to go to the reserve funds. The APF fees, $3,500 currently on any property that's sold or a title change occurs. And then, of course, the operating, a lot of people get confused on that. But this is above the capital-related section. It's the operating income. Those are also directed by policy to go to the reserve funds. And briefly, now again, people get a little confused on this, but the reserve funds at $27 million that we ended with, there's the 3.7 that's held with JP Morgan, mostly in very high liquidity money markets or CDs, all within 1 year. As Ann alluded to, any of these are redeemable at any time. Just for your FYI, the Vanguard funds have specific policies associated with them that we adhere to. The three most sentinel ones are, it has to be 60-40 ratio of 60% bonds, 40% equities. And I won't try and tell you all that, but we are within that range. Second component is that any fund can't be more than 20% of the portfolio, and we don't have any problems there. And then lastly, they don't go out and purchase in any specific fund, any specific stock. They are all essentially following the index funds. So they're pretty much following the market versus trying to advance it in any kind of specific stock picking or anything. Very, very conservative posture. I love this slide. In 2015, in my opinion, people made some very good decisions. Back to 2010, 11, 12, 13, right here, a decision was made to expose the reserve funds to a higher yield using time on your side. Some of this increase was in relation to the increase of the fees, APF fees, but here the last 4 years have been held at $3,500, and yet we continue to see both the interest and the appreciation of the equities give a nice tailwind, such that probably $4 to $5 million, if you were to aggregate all of those, has been added, which puts our reserve percentage in a much better position than had we been kind of just investing only in CDs. And there is some a lot of HOAs go that route, but by policy we try to use our 10, 20, 30-year cycle for being a little bit more aggressive so that we can get 600,000-700,000 of interest and dividends versus, a couple $100,000 in CDs. So that certainly is open for any discussion, but at this time, that's what the board designates. And then lastly, for anybody on election day, but they will be here, your BNF Vanguard does required by the policy I referenced that they are required to do quarterly updates to your committee, and that will be November 3rd.
No questions.
Kathy?
None.
Lou?
No questions.
Harry?
No questions.
No questions.
Lisa?
Pete, I too loved that slide. Thank you, but no questions.
And Terry?
No questions.
Thank you very much, Pete. That was good information for all of us. The last thing on our agenda is new policy and protocol for owner-member awareness. And Pete is going to talk about this along with our property title analyst Deb Long and our member services lead supervisor Terry Wood. So Pete, I'm going to turn this over to you.
Thank you. First of all, just like in the audit, I recognize Tim and Karen and our accounting staff for these issues that you're going to hear about. These two gals to my left here are phenomenal. They really know their stuff and deal with any owner member having a question about dues or APFs or title changes. And we're going to show you the depth of how much membership and property titles deals with. You'd be very much shocked, and they do an absolutely great job. Back in about February, my office was back in accounting, and I did not interact as much with membership as I would like to. And so I moved my office up there, and that was been a very good move. I very much understand those policies and how these folks interact with the staff exponentially better than where I was before. Again, to my left here is Terry Wood. She's now, or is the lead of all the staff up front. And Deb Long has a focus upon APFs and the property and title changes and everything. And both of them will explain their functions a little bit here in a second. And that's hard to read. So Terry actually has a little bit of a disclaimer of what they do, and you're going to be impressed.
So in membership, we are responsible for collecting owner member dues. However, that is the minimal part I look at, the minimal part of our job. We're the welcoming party. We're the first interaction that people have after they've purchased their home. They come in, they get their owner member cards, we give them an owner member packet, and we sit down and explain how Sun City West operates. So we're an information center. If we have owners that are going to rent their properties out, we explain what is the impact, what does that mean? We have tenants that come in to sign up to get recreation cards. And so we explain that process to them. They're treated just like owners, and we welcome them also with member packets. I think one person up there is an actual golfer, but we are tasked with explaining the difference in the golf cards. What does break even mean? If I buy a Kachina card or I buy an unlimited card, how many rounds of golf do I have to play? So we have to understand that process also. APF fee, which is changing all the time. We have to be aware of that so that we can answer some questions prior to them providing documentation to Deb so that she can analyze whether they get a refund or not. What happens when somebody passes away? You know, we deal with children who know nothing about Sun City West and what are the requirements. and kind of hold hands of the spouse, you know, and take care of them. The new the new portal, not golf portal, but the new web portal. We troubleshoot that. You know, we hand walk people through, how do I sign on? I'm using my little cell phone. How do I see everything that I need to see to get signed on? And we walk them through that. We also, at this point, are verifying web payments. We want to make sure that the payments are coming across as they should be and people are credited with paying their dues. So that's a little bit of what we do. We listen to people's stories, we hold their hands. If we have upset owners, we try and resolve those issues and not pass them up the chain of command. And I think the girls that are up front handle that very well. We also talk about, we're a 55 and older community, and what are the qualifications for younger people to live here? And so, yeah, we do pass a lot of information. We listen, we laugh, and we really take care of our people. So money is a big concern, but our owner members are the biggest concern to us. So thank you.
Terry, I want to applaud you and your staff because you all do a wonderful job. Anytime I'm in there, I can see you interacting with people, and you're always trying to be very helpful and very friendly. And you've made great strides in the 10 years that I've been here. And like the fact that you're making it easier for people, for us to do things on the web, if that's the way we prefer to do them, and not have to do the personal interaction. And that's been especially helpful during the pandemic. So thank you very much for that
Thank you.
education for us.
I'll pass that on.
Thank you, please do. Pete, you want to go ahead?
She mentioned this earlier. Terry, you want to speak briefly to, I'll give a little background. Mr. Schwind over there is championed with the responsibility of master planning, and I think we were starting to try and evaluate surveys and things like that on a broader scope, paid for essentially by association, and you could spend some pretty sizable dollars to try and get data, but it kind of, a little light bulb came on either by Terry or Deb or Bill or myself, and well, why don't we, start to ask the owner members, 100 of them are coming in for their new packets every month, what was some of the purpose of your wanting to relocate to or move to Sun City West, and Terry, you can explain how you've been doing the survey and what results you've had.
So as the new owner members come in, they meet with one of the staff, and we will ask the question, how did you hear about Sun City West? What brought you here? And then we will write that information down. But then on the flip side of that survey, we asked, what was most important? Was it the weather? Was it family? Is it the golf courses, the rec facilities? What is it? And surprisingly enough, we've done probably close to 60 surveys in maybe a month and a half. And surprisingly, it was family and friends. 62, I think about 62%. And golf course, I think, came in at around 50%. So I was surprised at those results. We're going to continue to do that. We would like to get up to about 100 surveys. But I think it was a cost-saving idea of Bill's for us to do the survey and not direct it. Let the owner member direct that survey. So, and I heard from my husband, it was actually in the newspaper. They talked about the survey, yeah. So we will continue that on.
Thank you, Terry. Another little bit of a light bulb came up. We're all about transparency. You heard that earlier when we wanted to propose, any kind of policies that we're enforcing, get in black and white so owner members can always see it. I think this was an excellent idea. It says open forums, but we're even going to take it a step further. The IT media folks back to my left here are excellent, and so we're going to take each of these items that we get frequently asked questions upon, you know, the top two, inheritances, liens, portals, all the way down to CC&Rs, and we're going to do little vignettes published and publish them out on the website. And it's not that we won't ever answer questions, but, you know, either a member can look it up themselves on frequently asked questions, or we can direct them to more in-depth if they, so we've got that in front of us. We intend to try and have most of those completed within the end of the year would be a nice target, but I don't have an exact date on that. I'm going to hand this off to a new program that has been an integral part of Deb's responsibilities, and it's been a big success.
So, little background on how this came about. I was manager in the member service department for about 3.5 years. We were noticing that there were title changes that were happening that we were unaware of. We didn't have any tools for us to find what those changes were. My background is I used to do title closings for 10 years, so I started kind of looking at that. So our first part would be when we would go to put late fees and send out the late fee statements. We would go out to the assessor's website, put out the address, and find out on there who is the current owner. Well, lo and behold, there'd be several times that who we had on our computer system and we were billing is no longer the owner, and possibly sometimes had not been for several years. This again goes back to explaining to our members what they need to do. Then we come to the point of liening the properties. We'd have inheritances. When we stopped doing we changed the guest fees and stuff, it was surprising how many children had their parents' card and were gaining access into the community that way instead of, you know, coming in and telling member services they really owned the home now. So that kind of led us to looking at the APF policy. A couple of you had helped us do that and revise that last February. So we had a change in the inheritance on there, and we realized that we really did need to get our system updated and know who really owns our properties here in Sun City West. I contacted a company, it's called Real Estate Data Solutions, and on a daily basis, I get a download that they give me for mostly properties that have changed titles that have not gone through a title company. Because typically the ones that are going through a title company when they're buying properties are your normal sales. So what this does is gives us the deeds that have been changed due to inheritance, for sale by owner, foreclosures, all of those types of things that we were unaware of previously. So that has really given us a huge advantage. Like I said, I get that on a daily basis, send out letters that our attorney actually drafted. So I send them out the letters saying, we found that you are the new owner on the property, and we go from there. Right now, we do see a lot also of people that are adding spouses on. So now you've got somebody that has added a spouse on, now they have mandatory owner dues. So that's been significant, has increased our owner member dues instead of associate dues, which are not mandatory. And a lot of people were gaining access by being guests of their spouse. So really cleaning up a bunch of that type of things. And then I'm doing the APF refunds, so we're getting more into checking those items out. Again, we changed the policy in February, looking more for the inheritances and for people that are flipping properties, investors, those types of things. So trying to keep a handle on our APFs. And then liens, I do the liens on the properties. So again, with COVID, we had a huge influx after July of properties that we had to lien. We did put a new process in where after I've liened a property after the 90 days, our attorney drafted a letter for me to send to them saying, here's a copy of your lien, here's a copy of your new statement with the lien fees. And those get mailed out right after I have put a lien on the property. That has really increased the amount of people that turn around and pay right away. So that's been a good thing. So, any questions?
They've been doing a great job. The FI-17, as you said, Lisa and John were part of that subcommittee. I appreciate the board approving that. This is all about transparency. I wanted to take a step back to Deb's statement a few seconds ago about the lien notices. It just, I'm not criticizing it, but it just seemed strange to me that, you know, a person getting a lien on their property and added amount due would not be notified of that. So I think everybody in the room agreed with that, and we've enacted that. It has the purpose of keeping them informed. Similar, we are putting up on the board the benefit gained from RED's program. It's not our inherent goal, but you'd be surprised, as Deb just alluded to, that people sometimes are just not aware. Again, it's not a money grab, it's simply communicating the policy and enforcing it as we see. When we are made aware of that, owner member dues sometimes are caught up in the net, as well as what we know was occurring before, which was people changing title and they weren't communicating it, even though, once again, that was a requirement of our policies. So we're just executing using technology to our advantage, and we believe that in kind people are made aware of it versus going on their next statement and seeing what is this $150 or $300 lien fee, and I had no knowledge of that, or they went to sell the property, I didn't know I had a lien on it. We're all about transparency. So
Excellent. That's what we need to do, is be transparent to our owner members and our residents here.
recently, the last item of our two items, this was, I believe, a brainchild of Mr. Schwind, quite bluntly, membership through the COVID period, and as we speak today, we still get a smattering of people come in where, being blunt, even though we're the rec centers of Sun City West, your owner member dues are a state statute that goes with the property, and it's not just as Bill uses, it's not just a Lifetime Fitness equivalent because you happen to use the rec centers. And so some people were feeling that the closure of those on governor's orders was somehow due to a refund. We empathize with, the things that are closed, but it has no bearing on the amount due. And then real briefly, you can't see that, but we do have hundreds, if not thousands of these now and published up in the membership area that explains where your dues are going towards. And while rec facilities are a portion of that, the vast majority is in other areas that are defined now. And I see you have one, Ann, so I hope you give an opinion of it, but Bill did a tremendous amount of vetting on that and relevant data, and quite bluntly, I don't know you guys can, Terry or Deb, but it's our understanding that we now hand that out as part of our package, our new members, as well as when people have inquiry on a refund request, it's met with explanation.
I have given this brochure to every member of the committee today because I want them to see this. I think this is just a genius idea, and I applaud having this available that we can give us to our owner members and people who may even be thinking about becoming an owner in Sun City West. It has a lot of information. It's in pretty concise form. I would suggest committee members even get some extra ones and have them if people start talking about, well, I didn't get to go to the fitness center for 2 months. Well, that may be true, but here are other things that you got during those 2 months. And need to make them realize, as I said, you're not paying for your annual membership to Lifetime Fitness. You're paying for more than that with this. And this brochure is very good to recommend this. So pick up some if you want to help pass them out. They are available in the Member Services office. And I think it's an excellent addition to the resources that we have here in Sun City West. And I thank Deb and Terry for their presentations too, and the part that they played in education today. I want to see if anybody has any questions about what we've just seen. John, do you have any?
No, me. No questions.
Kathy?
None?
Terry?
Just one. Reds is great. That was a great ad. Is there any, do you ladies see any other holes you have to close to get people from gaming the system? I mean, it will. I work with the public all my life. I realize that they're going to find a hole to get in there.
Deb, you're going to win that microphone.
We can hear you. Go ahead. Right. Yeah. All right, thank you.
Human nature. Lisa?
First off, great presentation, you guys, outstanding. Membership services, you guys have done such a great job. And Deb, as far as coming with the APF and the new, what you've done with the residents as far as the
Title changes.
titles, thank
Yep.
you. I couldn't think of the word.
That's okay.
Thank you, because I keep looking at this brochure. I'm so enthralled with this brochure that Bill has done that I'm just, this is wonderful. I can't tell you over the last 4 months how many people, how many times I've heard, you know, that we're not going to pay our dues, and why should we pay our dues? And I'm sure everybody else is in the same boat. So well done. This is outstanding. I'm just really, so great job.
And I think about 3 years ago, when I first started in the member service department, people were coming in saying, well, I don't use the facilities, I don't want to pay these recreation fees. Well, in member services, we started saying, these are owner-member dues. They're not rec fees, and that's a big change for a lot of people. They need to be called owner-member dues, because your name is on title to the property. That is why you pay them. It's not whether or not you use the facility. So that's something that, you know, we strongly urge everybody to call them as owner-member dues, not recreation fees.
Good point.
So quite impressive. Thank you.
Harry?
No comment.
Thank you. Lou?
Good job, nice presentation. The trifold is excellent. Good work.
Yes, Bill?
I don't know if my microphone's working, I apologize, but I need to get closer. If there's a opportunity for a comment in this agenda, I would just, before you adjourn, I would like to just make a one or two.
That is the next thing on our list, so I'm going to open it up to comments from the committee and the staff who are here. And Bill, I'll let you just go first, since you have a comment.
Well, thank you, and thank you for your compliments on the brochure. A couple people in this room, both Katie and Martin, were the design folks on that, and I can't thank them enough as far as the vetting and putting those things together and how we got it printed for the amount of money that we actually did. So, and it's been serving, I think, membership well. I know I got some good feedback from George and some of the other board members that have been passing those along, like you, Ann, and it has really been a very helpful tool in some of these trying times. But I just, if I may, I just want to summarize really some of the things that I heard today. And I can't thank you all enough and for doing what you're doing and being on this committee. But as one of the goals that you talked about as far as reviewing some of these finance committee policies, there is one that I really want to focus on, and you can place that on an agenda whenever you see fit. But some of the words Pete mentioned today, and they were strung in all of the presentations that were brought forward, not only by Pete, but also by our auditors. When it comes to reserve funds, when it comes to risk and exposure, about 7 months ago, Pete had dark hair. Enter COVID-19, and Pete unfortunately didn't have a slide today that we tend to stare at on a daily basis, but it looks like the southern border of the United States, and that's our reserve fund. When we started losing about $4.5 million in the middle of March. We started, when Katie first said, Bill, we need to have a meeting, and next thing I know, I walk into a room and there's like 4 firefighters and a couple of nurses from Banner explaining to me what COVID-19 is, right? I'm like, you're kidding, right? And so things changed at that point. So Pete and I had a little chat shortly thereafter, and I had him provide me on a daily basis what our funding was doing. And so as this map continued to grow, we were kind of in the bottom half of Texas there for a while, and I'm like, oh my God. So this policy that basically talks about our investments and where are we going, we've met with several Sun City Grand, Sun City Festival, folks in South Carolina, people in Texas, people in California, all with Sun City names, talking about how they handle their investment income and their reserve funds and those types of things. And even the gentleman Blanding, who is our reserve fund specialist and managing 25,000 HOAs and planned communities nationwide, his eyebrows went way, way up when we were informing him how we invest. Most people are a little bit less risky than us. And so that is just something with all of your backgrounds that I heard today, as far as your introductions go with your financial resources. It would be, I think, great to have a roundtable and really discuss what we're doing as far as investments go. I know he would sleep better at night. But again, we're talking 23 million. And one day when you wake up and you're down 4.5, that's troubling. And so looking after the owner members here and all of the investments that have been made, are we doing the right thing? And should we play it safe? I don't know what's up ahead. I don't know how bumpy the road's going to get. It's a long-term plan. I get it as far as investments go. But again, that's just something I'd like for us to address. Thank you.
Thank you very much.
And it's up there. Bill's a funny guy. I really appreciate his humor, but he about right there, he came in my office one day. He goes, I sure as hell hope we don't have a Florida. So hope everybody got that. But one other component I wanted to highlight was rebalancing. It worked to our favor. And I know some of you might have heard this at the workshop, but a 5-second version is that February 18th is what we tracked this on. That was essentially the night when a 1,200 point impact in the Dow, which for a while there was seeming quite regular, and even 3,000 point move on one day. Thankfully, they've been more modest now. By March 16th, we had equity decline of some $3.5 million, and so the 60-40 bond equity ratio that I was talking about ignited that our investment broker, Vanguard, had to rebalance to get back to the 60-40 mandated. And they only absolutely by policy have to do that when there's a 5% variance. In this instance, then the equities had declined so much that they held a 34% ratio in 66 bonds. So to rebalance, they sold bonds, purchased equities when we were at the absolute low, and fortune on our side that over the last period of time, the equities have rebounded, and so we purchased them at the absolute low. Not exactly like white hair included, not exactly the method you want to go about trying to gain, but the policies that you do for diversification, 60-40, and then some funds held in money market, it dampens the risk, and over time, it would take a pretty sizable move to even get close to where we would have to start watching our risk moving below the governing board 40%. Just by quick math, each percent is worth about $500,000. So it'd take about a $5 million move to move from our 52% move down into where the governing board would probably want to take notice. So I hopefully don't see that. None of us in the room do. But again, sometimes you take risk to get, 300, 400, or 500,000 more in return on your investments than just holding up under CDs and stuff like that. But it's open for discussion, and I encourage that.
Thank you, and we will be discussing that as we look at all our fiscal policies over the next several weeks. Does anyone else on the committee have any comments? Lou, any?
No comment.
Harry?
I'd like to apologize for being late. I was reading this stuff, and I had 1:30 on my calendar. My mistake. Sorry.
That's quite all right, Harry. We're glad you're here. Lisa?
No comments. Thank you.
Harry?
No comment, thank you.
John?
No comment.
And Kathy?
Thank you. I think I'm going to enjoy this, and I appreciate your tolerance of my questions. Thank you.
Good. Thank you, and we're glad you're with us. George, have we had any comments from anyone listening in remote?
We only had one come in that was a question that could not hear the auditor speaking over the microphone, and that has been taken care of. Just a comment. First off, I cannot thank each one of you enough for volunteering your time on this committee. Everybody knows budget and finance is one of the hot buttons in any community at any time. And to be able to sit on this committee and to be able to talk to our owner members with confidence that we are on the right path and doing the right thing is huge. And the other comment that I want to really make was about this brochure. The trifold is a beautiful thing, and everybody opens it up threefold. But that first page on there where it says state law mandates, this is just as important as what our dues go for, because this is the question everybody asks. Well, how come we're going up? How come this is this? This is what is mandated, and it is just as important as everything that's paid for underneath it. And I really wanted to thank Bill and his staff for putting this together to make sure that we can go out and represent ourselves in the community on that one. Thank you, Ann.
Thank you, George. Our next meeting date will be 2 weeks from today. It will be on the 6th of October at 9 a.m. here in the social hall. And without any other business, we are adjourned. Thanks to each of you.